Unlocked, your key to online trading. And today we are going to be discussing the Euro US dollar. So without further ado, we'd like to first go over our disclaimer here, which you can take a look at, which basically just tells you that this program today is for educational and informational purposes only. It is not to solicit or to put anybody in any type of buying or selling mode whatsoever. We are just here to go over what's going on in the markets and hit some key levels and give you some ideas and some areas to look out for whether you are bullish or bearish, and use that and incorporate that in your trading. So without further ado, let's go to our chart here, and you can see we have the Euro US dollar chart, and it's a daily chart. Now you see those three black arrows, those are pointing to our key pivots that we have pointed out for you. The number one is the recent high of 112.15, and then we also have 111.75 and $1.1109. Now these pivots are all very tight, and that's because the Euro US dollar has been trading in a relatively tight range now for quite some time. You can see the lower pivot there at 111.09. That goes back into April, and you can see that in May it took out that low a little bit and teased it, and now it's hovering just above it once again. So far it's acted as a good support base, and you can see that since that original touchdown phase that it retraced back up to the 112.50 area, and that pretty much has set the boundary for the range that it's been in for the past almost now a month and a half pretty much. Now the deal that's going on with Brexit between the EU and the UK has definitely added to some of the variables that are keeping this market in a tight range until it's not just economic uncertainty, because both the UK and the EU are tied to each other very strongly. However, the number, even though the economies seem to be slowing, that's really probably not the main driver of this range trade conditions that have been setting up. It's probably more due to the fact that there's a stalemate in the Brexit, and now you have the stepping down of Theresa May in the UK and her replacement counterpart, which may or may not bring on a change and make things happen at a quicker pace than they have been over this past 2-3 years now. I doubt that that's going to happen, so I think that we'll see what happens over the next month. Right now, those factors are not going to probably cause the Euro US dollar or the pound dollar to break out of its current wide range that it's been in for the past month and a half. So, and what you can look out for is that if there is any major weakness in the dollar, that could then change things for this market. Now you can see that on the daily chart, obviously it's a bearish trend. Over the last month, it seems to be stabilizing, trying to set a bottoming range, basing area, and that's probably because of the political tensions and everything that's going on. There's nothing really driving the dollar that much higher, even though it's strong. There's nothing to really fuel it and make anyone that's overly bullish look to see the dollar continue its trend over the next 6 to 9 months, especially with what's going on with the Federal Reserve and the central banks globally, actually. So the dovishness of all of those banks, as well as the U.S. Federal Reserve, is a carry trade issue that originally was factored into this trade earlier in the year. Now with the unilateral dovish view from all the central banks, I think it's pretty much off the table. So we'll have to watch. Right now, the yield curve in the U.S. is starting to invert. Sometimes people say that that will be an indication or a precursor signal of a recession that is on its way. We are long overdue for a recessionary period, and for the market to slow down on its highs is not necessarily a bearish thing or a bad thing. It's something that needs to happen because the market's overheating in general. So, but without that, those forces involved, I don't think there's going to be any major move in the U.S. dollar over the next few months. That being said, you can probably be rest assured that the market with the Euro U.S. dollar here is going to stay within these key pivots probably for the next week or so. Now, the critical breakout area is that little circle, elliptical area there where the downward sloping resistance crosses over through the pivots. That is probably going to give the market a little bit of a tough time in the short run. if the bear trend really is that solid and the market really is trying to keep this market at bay, there's probably not going to be much of a breach of that area. Now, if the market closes above 111.75, and especially if it closes above 111.75 and it's above that blue line, then we probably could see a higher range trade, not necessarily a bullish correction higher, but definitely the bulls will probably be spiking up towards that 112.5, maybe even up to 113 in the euro US dollar. That would not mean it's very positive for the euro, and that would not necessarily mean that the dollar is very weak either. If anything, a corrective move in the dollar is long overdue, and that alone could actually propel the euro US dollar back up into that 112.5, 113 area. Now, the reason I don't want you getting overexcited about any type of rally like that, on the chart it may look like it would be a breakout if that would be to occur, which it would be a breakout. However, you have to look at the ranges that you're looking at. You're looking at the market where in the euro US dollar, where it's basically been trading in $1.50 range for a month and a half. And that's a very tight range. Any day trader will tell you that there's not much on the table in $1.50 range over a month and a half. That will chew up all the weak longs, the weak shorts. It's only an environment where the brokers and the algos probably have a good chance of churning up some profits, because outside of that, any weak longs and shorts are going to get chewed up. So definitely pick your points. Use these pivots as an example. You can see how they are very big gravitating high and low areas and breakout points, even if you go back on the weekly and monthly charts. That being said, over the past 3 days, you can see this is a current chart that was just pulled and copied just a few minutes before this presentation. So the euro US dollar is on near its lows, and it's trading around the 111.28 area. That's hovering obviously above the 111.09 pivot. I would like to see a test of that. If it tests that level once again, and we can hold that above that, especially hit a close above that today, and tomorrow possibly get a rally back up towards the 111.5 area and a close up around that area, then I would say that the range is probably pretty solid. And now, like I said, I wouldn't expect a very big bullish move, but you probably would see the bulls take a run for higher levels, testing that resistance on that lower sloping blue line, which you see on the chart, and then pressing up towards that 112.15 critical breakout resistance area. Now, like I said, it says critical breakout resistance area. It is, but with the volatility and the range momentum that we're looking at right now, you're looking at a breakout that, like I said before, I mentioned 112.5, 113 even, maybe 113.5 would be probably the extreme of any major upside surge in buying that we would get. And this would also probably be predicated by some sort of dollar reaction, not a euro EU reaction. Or even if there was, for instance, let's say Brexit, all of a sudden today they came out and said, okay, the EU and the UK came to the table over the past couple hours and they have everything resolved. Boy, would that shake up the currencies. The pound dollar obviously would start to swing in a major way. Most likely there would be a rally off of that after initial volatility. The euro US dollar might also see a lift in a situation such as that. However, the odds of such a news event happening, I would say, are probably, although probable, are very unlikely. In fact, we will probably be talking about the Brexit in the UK and the differences of what's happening between the euro US dollar and the pound dollar 6 months from now, regrettably. So anyhow, back to the euro US dollar with these final pivots. So that breakout area, like I said, if you see a move above there, then the bulls are moving, momentum's there, but don't look to catch any major sustained move. If anything, I would take your profits early. Look for keep your stops tight on any upside breakout. Now, as far as a major slide, if the market really takes a dip below 111.09, especially closing, well, then it's probably going to keep on leaking. You can see how this is channeling lower, and that would also indicate lower move lows, which confirms the bear trend's momentum. And then you would probably look for support to start to reach out again in the 109, 108 area. 108.5, 108.75 seems to be a very strong bouncing point for when the market has spiked on any overzealous break. And I do believe that if you do see a spike down there, that's probably what you're going to see, or unless this erosion, which we've seen over the past couple of days, continues, that kind of a slide into next week could definitely bring the market, like I said, down into that 109 area. So your probability for any extreme moves most likely right now is with the trend, and that would mean that, like for instance, this critical breakout resistance area, let's say we have a rally over the next couple of days, it just keeps on butting up against that 111.75 area and against that blue sloping resistance line. If the market it's held at bay there and that little circle area holds, and the bears bring the market back down towards that 111.09 area, well, then you have to say that that current last high, which our 112.15 pivot is at, that high is pretty secure. That is your risk level. That is your last lower move high, and a lower move low would probably target around the 109 area to 1010 area. 110 area. So, and that would mean that the bearish trend obviously stays in place, and our range trade scenario that we are looking at, and the only reason I say this is because of the past month and a half, the way it's been trading, it looks like the bear trend is trying to pace a bottom, or it could be just basing, and then we're going to see another drop off again once again in the next week or so, going into midsummer. Now we are in a summertime trade. Expect a skittish volume on different days. You could notice, especially where the high is there a couple days ago in the Euro-US dollar, there was a big spike in volume and drop off in volume. So what we could have is a big reversal of trades, especially as we're heading into the rollover for the futures contracts. That does affect some of the cash positions because certain people are hedged, especially if they're trading with on the side of the swap or against the swap. They may be rotating out of or adjusting their futures positions, which means they may be canceling out their cash positions in the short run while they rebalance. This would cause some choppy volatility and so not necessarily vacuum moves, but just you would see some intraday bullish and bearish spikes that really have nothing to do with any news or even really heavy trading. It's just a revolving of positions and balancing of positions by bigger players in the market. So Euro-US dollar weakness prevails under the weight of a strong US dollar. Although this market is under pressure, you should be careful to avoid any radical corrective moves higher. So once again, I'm just trying to say be careful of your bullish moves. They are most likely going to be corrective spikes until proven differently, and that would be with confirmation of news that would fundamentally drive the differences. Until then, the dollar is strong. The Euro-US dollar is a sell rally forecast. The bearish trend is still in place on the daily, and the trend is your friend. Don't try and catch a falling knife or get in the way of a freight train. So good luck in your trading. We hope that this analysis will be helpful for you, and we look forward to bringing you some more sometime in the near future. So if you like that, then what we would really like for you to do is to take a look at our book, High Probable Japanese Candlestick Patterns, which is available on Amazon. You can find it in both Kindle and paperback versions, and this will help a lot of you with setting up buy and sell signals that can help you put the odds in your favor. They work in the Forex markets, the futures markets, the stock and option markets, and they've been used for over 400 years to give traders a competitive edge against the markets. Check it out when you get a chance, and we will see you again on Twitch broadcasting some analysis for you Forex traders again soon. And with that, we will end our program.